Have you ever wondered if EverBank is a publicly traded company? It's a question that many people ask, especially those considering investing or simply curious about the financial world. Today, we're going to dive deep into EverBank's public trading status. We'll explore its history, its current situation, and what it means for you as an investor or consumer. A brief history of EverBank. EverBank has a rich history dating back to 1991. It started as a small community bank in Florida and has since grown into a major financial institution. Over the years, EverBank has expanded its services to include everything from personal and business banking to wealth management and mortgage lending. The path to public trading. In 2008, EverBank made a significant decision to go public. This meant offering its shares for sale to the general public on a stock exchange. The decision to go public was driven by several factors, including the need to raise capital for growth and expansion. It also allowed EverBank to increase its visibility and attract a wider range of investors. The initial public offering, IPO, was a success, and EverBank's shares began trading on the New York Stock Exchange under the ticker symbol EVER. EverBank's public trading status today. Fast forward to today, and EverBank remains a publicly traded company. Its shares continue to trade on the New York Stock Exchange. As a publicly traded company, EverBank is subject to various regulations and reporting requirements. This means that it must disclose financial information to the public on a regular basis. Investors can track EverBank's performance by monitoring its stock price, reading financial reports, and following news about the company. The benefits of public trading for EverBank. Going public has provided EverBank with several benefits. First, it has allowed the company to raise significant amounts of capital, which it has used to invest in new products, services, and technologies. Second, public trading has increased EverBank's visibility and reputation. This has helped the company attract new customers and business partners. Third, public trading has provided EverBank with a more robust governance structure. This helps to ensure that the company is managed in a transparent and accountable manner. The risks of public trading for EverBank. While public trading has provided EverBank with many benefits, it has also exposed the company to certain risks. One of the main risks is that EverBank's stock price can be volatile. This means that the value of the company's shares can fluctuate significantly over time. Another risk is that public companies are subject to increased scrutiny from investors, regulators, and the media. This can make it difficult for companies to make mistakes or missteps. What does this mean for you as an investor or consumer? If you're considering investing in EverBank, it's important to understand the company's public trading status. As a publicly traded company, EverBank's shares can be bought and sold on the stock market. This means that you can potentially profit from an increase in the stock price. However, it's important to remember that investing in stocks involves risk. There's no guarantee that EverBank's stock price will go up. If you're a consumer, EverBank's public trading status doesn't have a direct impact on your experience. Whether the company is publicly traded or not, you can still use its products and services. So, to answer the question we posed at the beginning, yes, EverBank is a publicly traded company. Going public has been a significant milestone for EverBank, providing the company with the capital, visibility, and governance it needs to succeed. As an investor or consumer, it's important to understand the implications of EverBank's public trading status. Whether you're considering investing in the company or simply using its products and services, knowing that it's publicly traded can provide valuable context. With that said, thanks for watching, and until next time.